As the United States deals with another outbreak of a COVID variant, the economic outlook is changing quickly. Senior economics reporter Steve Leisman joins us right now with the CNBC Rapid Update. Hi, Steve.
Hey, morning, Becky. Between the flight and concert cancellations, forecasters are changing their outlooks almost as fast as the news is coming in and the virus is spreading. Forecasters, they sent us their estimates for the CNBC Rapid Update, warning, hold on, there could be more changes to come. But here's where we are now. Fourth quarter growth continues to hold up well, but it's been marked down somewhat. The disappointing third quarter, remember, it was depressed by the Delta outbreak. It gave way to a rebound this quarter, with GDP still expected to be near 7%. The first quarter has taken some hits with the general trend of forecasters. They're pushing growth into the second quarter and beyond. Annetta Markowska from Jefferies writes, spending is likely to slow further in December and contract in January on the back of Omicron and the cliff in the child tax credit checks. However, the weakness is likely to be temporary. Here's an example. Fish canceled 4 New Year's Eve shows on the way up to New Year's Eve at Madison Square Garden, but they moved the shows to the second quarter. That transfers economic activity from the fourth quarter to the second quarter. Economic losses, however, from holiday flight cancellations, they're more likely to be permanently lost. Here's a result also. People could use the money they were going to spend on services to buy more goods. That could boost inflation already high in the goods sector. Here's our outlook, CNBC Rapid Update on inflation. Seen peaking this quarter near 6% and only gradually coming down over the next several quarters. By 2023 is when it nears the Fed target, though still slightly above it at 2.2%. All of this subject to change as forecasters try to figure out how much this outbreak delays, cancels, shifts spending, employment, and overall economic activity. But another factor is how much some Americans in certain regions of the country treat this outbreak more as a new but regular part of daily life. And Becky, that's just difficult to model into the forecasts.
Yeah, I would think any of this stuff is pretty difficult to model. But overall, my guess is, and you correct me on this, most of these economists see it not having a huge impact beyond moving stuff from one quarter to the next.
Right. So you take some stuff that was going to happen this quarter, you move it into that quarter. By the way, I mean, take this Fish concert example, which is complicated by the fact that if the Knicks make the playoffs, then there's some problem with it. But in any event, that's a concert that couldn't take place. Right. Are you laughing about the possibility of the Knicks making the playoffs or just laughing at the
yeah, I think COVID's laughable. More likely to screw things up than the Knicks making the playoffs, right?
Right. No, that's true. But they just warned about that. But anyway, the point is that those are dates that where economic activity could not happen at Madison Square Garden. Some other concert won't happen there. But you move it from this quarter to that quarter, and then you shave off some of the stuff like these flight cancellations. You were going to see grandma and grandpa or your uncles and your aunts for Christmas. Because it didn't happen for Christmas, you're not going to do it again. So that is lost permanently. And meanwhile, what do you do with that money? You stay at home and you may go order some more stuff online. You might save it. And so there's another aspect of it. It's all sort of really a big mess here trying to figure out the forecast. But you're right. Only bringing it down a little bit for now. Still seeing, I think that's the key, above trend growth over the next several quarters.